what people are missing, I think, about Bitcoin treasury companies is the whole point is to strengthen your balance sheet by adding Bitcoin to your balance sheet. Very different from, BlockFi or Celsius, where you're going out on the risk curve and, lending to riskier and riskier counterparties, and then it all blows up. With Bitcoin treasury companies, they're utilizing capital market tools to strengthen a business's balance sheet by accumulating the most attractive asset in the world, which is Bitcoin.
Welcome to the Bitcoin for Corporations show. I'm your host, Pierre Rochard. And today I'm very honored to be joined by Jesse Myers, also known as Croesus BTC on X. Jesse is the Bitcoin strategy advisor at UTXO Management and a leading voice on Bitcoin adoption, specifically in the context of corporations. So welcome on, Jesse. It's great to have you.
Yeah, Pierre, thanks. Thanks for inviting me on. Fun to actually do a podcast with you, interviewing me for a change.
I wanted to bring you on. I wanted to hear what you're up to at UTXO Management, but I really first want to start with your Bitcoin origin story, and kind of what were some of the formative experiences leading up to learning about Bitcoin that really opened it up for you.
Yeah. So I got into Bitcoin the hard way, the way that many people in the era that I got into Bitcoin found their way to Bitcoin, which is through altcoins. So I got interested in Ethereum in 2016. At the time, I was getting my MBA at Stanford, and in Palo Alto, there was a lot of buzz about Ethereum, and I heard it a few times and took interest and went down that path. That was great in 2017, and then the altcoins that led me to did extremely poorly in 2018. It was very humbling. It was rough, and it forced me to try to figure out what I had missed. Why were these altcoins that were technologically superior to Bitcoin massively underperforming Bitcoin in this bear market? And that led me to the rabbit hole of reading in pretty quick succession. I read Bullish Case for Bitcoin, Changing World Order by Ray Dalio, Price of Tomorrow by Jeff Booth, and then capped that off with the Bitcoin Standard by Saifedean. And that rocked my world. That frankly undid my MBA, because everything I had learned had been very Keynesian, and that series of readings was fundamentally Austrian in its teachings, and I couldn't deny the logic of it. So that pretty quickly brought me to Bitcoin. Not long after that, I started contributing to Bitcoin as a author and analyst under the pen name of Croesus. Croesus specifically because King Croesus was 2,600 years ago in Lydia, now Turkey, um, established the first bimetallic standardized coinage. So
Right.
a huge milestone in monetary technology to facilitate trade. And I thought that was a cool bit of monetary history that I think Bitcoin is in the direct lineage of.
Yeah, that makes sense. So, you came at it from this lens of, do you think that people who are Austrians who learn about Bitcoin are more likely to end up Bitcoin maximalists without dabbling in altcoins, or like are altcoins the result of Keynesian schooling?
Yes, in short, I do fully believe that. I think altcoins are the result of Keynesian schooling plus Silicon Valley ethos of move fast and break things, and those both have this cultural cachet because of the lessons of the internet over the last 20, 30 years, and people think that that's how innovation is going to happen, but that doesn't work for money.
Right. And you wrote an epic piece called "Why the Yuppie Elite Dismissed Bitcoin" in 2020. So, does this piece really kind of synthesize the learnings you had along the way?
Yes, that piece came from my frustration with my friend group, in particular my MBA friends, who were so dismissive of Bitcoin, and And all my other friend groups weren't that dismissive of Bitcoin. They were relatively open to the idea, but I think my Stanford MBA peers, because we had all invested so much of our time and energy and money into this school of thought of what we had been taught in business school and in our careers in business, there's a lot of opposition to that, to narratives that are counter to that school of thought, the fundamentally Keynesian school of thought that we all learned. And it's fascinating. I think a lot of Bitcoiners have experienced that in their lives, and I think that's why that piece resonated so well with the community and became surprisingly popular. Um, you know, uh, so many people in that era read that piece and still recommend it to their friends. And I think that the whole thesis there was that Bitcoin. Some people say that Bitcoin's an IQ test, and I think that's wrong. But you can't argue that Bitcoiners do tend to be quite smart. But my Stanford MBA peers are super smart too, and they are generally very dismissive of almost universally dismissive of Bitcoin. And the thought that I explore in that piece is that if you have high trust in the system, it's hard to get to the Bitcoin maximalist point of view. And trust in the system extends to like believing the Keynesian ideology that you learn in school, believing that 2% inflation is necessary for a healthy economy because that's what you were told, even though that was just kind of a number that was yeah manufactured in Australia in the 1980s, I believe, if I recall,
Yeah.
and was convenient to governments, and so that became established wisdom. So if you believe that world, it's very hard to understand Bitcoin's value proposition in direct opposition to that thesis. But if you are wary of that, or if you're wary of government incentives, if you're wary of money printing, the irresistible levers of central banking, of make everything better by printing money, uh, if you're wary of that, you can find Bitcoin more easily. And I think Austrians are already wary of that Keynesian school of thought, and so I think it's easier for people who have studied Austrian economics to find it, like you, Pierre.
Yeah. So when people go, and so I went to business school as well. I didn't get a MBA. I got an accounting degree, but
From the
they
same school as me.
yeah, every kind of curriculum includes macroeconomics, right?
Yes.
And in those business schools, and so all of the business leaders in corporate America, by and large, have essentially had to take Keynesian economics and not necessarily been exposed to Austrian economics along the way, meaning that all they're taught is why money printing is good and why it's necessary. And then in the corporate world, I think that it has certainly translated into similar kinds of, well, let's just do NFTs, right? Like as our corporate strategy. So the crypto corporate strategy has been, do you think, warped through that lens of the Keynesian education of those who are in charge of that strategy?
Yeah. Yeah, I think what you're getting at is that the idea of Keynesian economics is it's a fine idea to control money and issue money and manage the monetary policy, and that is adjacent to NFTs, where you can launch your own project, manage it, and own all of the features of it. And obviously, Austrian economics says that no, the free market will establish what is the best money, and don't mess with it. And Bitcoin is obviously in that school of thought of nobody can control it, nobody can change its monetary policy. So they are diametric opposites on that spectrum.
Wish you could access cash without selling your Bitcoin? Ledn is the global leader in Bitcoin-backed lending. They've issued over $9 billion in loans since 2018 and never lost a single Satoshi of client assets. A Ledn loan is different. With custodied loans, collateral is not lent out to generate interest. No credit checks, funds in under 12 hours, with proof of reserves reports published every 6 months. Ledin gives Bitcoin holders a secure and transparent way to unlock liquidity without selling. Learn more at ledin.io.
And then it strikes me that your thesis is, when we look at the data of retail adoption happening so far earlier than institutional adoption, corporate adoption, that it reflects that dynamic that, the retail investor is more likely to either not have been indoctrinated in, hey, fiat is good and Bitcoin is too volatile, or learn about Austrian economics. um, but now we are seeing institutional adoption start to catch up. Um, and what do you think is really driving that? What is, for example, BlackRock's motivation, or the strategy in 2020, that made them overcome that bias against Bitcoin?
Great question. I think that individuals individuals are lighter organizations, right? They're easier. It's easier for an individual to make a decision than it is for an organization made up of a bunch of individuals on committees and so on to make a decision. um, and so inevitably you'd get a far out there thing like putting your money on magic internet money. That would be understood and by individuals first, and individuals would be the first to make that leap. And it has been interesting how slow institutions and corporations have been to embrace the same benefits that individuals saw, as early as 16 years ago. But I think that is the nature of you know, the consensus wisdom of our era, and the career risk also inherent in defying what is known, right? Here's a great, I think it's a Twain quote of, it's not what you don't know that gets you in trouble, it's what you know for sure that just ain't so. And that's very, very true of fiat wisdom of, like, don't trust anything but the dollar, or anything but government issued money. um, I think it's very important to highlight, what kinds of institutions are the first to adopt Bitcoin. um, at the corporation level, and at the sovereign level. It's uh, entities that have a need for it, and also entities that have concentrated decision making rights into as few people as possible. So in the case of strategy, Michael Saylor had control, and all it took was for him to get orange pilled and believe that Bitcoin was the solution to his melting ice cube problem for his treasury assets. For El Salvador, the circumstances were such that it made sense for Bukele to embrace Bitcoin, specifically because they were already on a US dollar standard, and meaning that they didn't control their own currency. They were downstream of the printing press in the US, and they got no benefits from the US printing money. So, what's your opportunity cost for switching to a currency that you also don't control, but nobody else controls? That's easier to make that leap. Um, anyway, I think going forward, looking at Bitcoin treasury companies, we see a similar sort of story of companies that needed something, or were otherwise going to die, are the first adopters of Bitcoin. MetaPlanet, their future was bleak. COVID had wrecked their hotel business. They needed a radical change, and so they were open to something that would be radically different. Uh, you know, MicroStrategy had a similar story. Saylor has said that he was running a zombie company, and they knew it, and they knew it was a matter of time until they were in trouble. So they were open to Bitcoin, and I think that's going to continue. I think that entities that adopt Bitcoin earlier will be those that have you know the circumstances that make that possible. A combination of decision rights in the hands of a few people, or if not one person, and a need, an imperative, a burning platform to make some kind of change.
Yeah, that makes sense. I remember one of the lessons I learned in a finance class was around the risk taking of management, and that
Yes.
you might have first assumed that because this is a limited liability company, that management's going to take too much risk. But actually, when you look at what happens, that management takes less risk than they ought to, because as you pointed out, that career risk, if something is very volatile but high return like Bitcoin, they're essentially, they're getting mark to market performance review, and that is really detrimental to taking risk. Um, but also to your point about the existential threat to the company, that's when it just becomes quite obvious that there's a lot of risk in not taking a risk, and that you do have to be backed into a corner to really throw a hail mary like adopting a Bitcoin Treasury strategy. But do you think now that we've seen I think there's clear evidence of success for strategy now that has essentially flipped the thinking in a lot of people's minds of, okay, well, we should adopt a Bitcoin strategy even if we're not in that situation of being backed into a corner and really needing to pivot. Do you think that even among committees where 5 years ago it was just one person on the committee, now it might be a majority or a consensus that we could see spontaneous corporate adoption of Bitcoin?
Yeah, I think every entity is different, and every entity is going through the individuals that constitute the decision making process, and every single entity on the planet, they themselves are going through the process of wrapping their heads around Bitcoin as they continue to watch it do what it does, which is uh, increasing scarcity of new supply issuance, and price going up over time through the combination of that increasing scarcity plus increasing adoption. And everybody has to deal with that and try to um, factor in Bitcoin into their mental model of the world, and how to manage assets. And there's going to be a tipping point for every entity. There will be some tipping point where Bitcoin makes sense to incorporate. And for some that'll be soon, some that's already happened, the vast majority that's still ahead. But it is the bottoms up process of the viral coefficient of Bitcoin's properties spreading through people, and then those people who constitute part of organizations, then impacting and influencing, and then eventually tipping the organization to um, incorporate Bitcoin into their treasury strategy.
So, do you think that corporate adoption has to happen through existing companies as well, or could it just happen through new companies or essentially growth plays, right? Of this company was very small and then it adopted a Bitcoin treasury strategy. Now it's very large. And so you don't need, strictly speaking, adoption from the uh, operating companies out there like Apple or Nvidia or
Yep.
the rest.
Yeah, I think that the best thing that Apple could do for their shareholders is to adopt Bitcoin as a treasury asset and do it, with conviction. I also think that they will be one of the last companies to do that.
Right.
And I think that's and it's an anecdote that I think is a truism too, that companies that are riding high, that feel like they have a great business and they're very profitable, have the least incentive to change what they're doing and to embrace Bitcoin. And
Yeah.
so I think they will be in the latter half of global adoption. And I think, by contrast, the zombie companies that need to make a change, or have a visionary leader who gets it and has control, they will be able to make that change sooner. Um, And I think that Bitcoin treasury companies are all it takes for Bitcoin adoption to happen in a very meaningful way for corporations. And I think operating businesses, that are profitable, cash cows, they come later, and that's okay. Yeah.
Yeah. So, how would you characterize like why is it that Bitcoin treasury companies can attract capital that, for example, wouldn't just go into a Bitcoin ETF, a spot Bitcoin ETF, or even into physical Bitcoin as a commodity, right?
Yeah.
What why are these different pieces of ways of allocating to Bitcoin developing in parallel?
Yeah. If you think about the properties that Bitcoin offers to an investor, they're incredible. It's the best asset in the world, but it doesn't do one thing. It doesn't deliver yield, right? And the entire idea of a Bitcoin treasury company is to leverage capital market tools to deliver shareholders with Bitcoin yield, and that's a very compelling value proposition. um, it does amount to taking some risk, right? So if you think of, I had this conversation with Michael Saylor 9 months ago, where I asked him, you've said that you never sell your Bitcoin. So, but now there are these Bitcoin treasury companies like yours that I'm missing out on because I'm 100% Bitcoin. What do you say to people like in my position? And he cut right through it and said, for Bitcoin maximalists, Bitcoin is the risk-free rate, but there's also a place in a portfolio for risk. And I've thought about that a lot in the last 9 months. I think he's right that I think the best thing that an individual can do is have your spot Bitcoin in cold storage, and then also evaluate, do you want to have some at-risk capital that's aiming to grow your Bitcoin stack through the prudent uh, leveraging and risk taking that I think Bitcoin treasury companies have proven is possible through tapping capital markets.
Yeah, so I think that like that line of reasoning troubles a lot of Bitcoiners because they immediately think of when people say, "Oh, I'm investing in altcoins to earn more Bitcoin,"
Yeah,
right? And
or like
um,
BlockFi or Celsius or these other
right.
things in the past. Yeah.
So yeah, how would you like explain the essentially the anti-fragility of like what has been learned from the past and how does that apply to the present and future?
Yeah. Pierre, I've we both went to the same accounting program at UT Austin,
Yeah.
and I think about that a lot because you're very interested in Bitcoin for corporations and in Bitcoin treasury companies too, and I'm very interested in it. And I think the thread for us is accounting. And when you go to accounting school, you learn the language of business, and it's all about financial statements, right? So it's all about your cash flow statement, but really your income statement and your balance sheet. What people are missing, I think, about Bitcoin treasury companies is the whole point is to strengthen your balance sheet by adding Bitcoin to your balance sheet. So that's a fundamentally sound strategy where what the intention is to add the best asset in the world to your balance sheet for the benefit of shareholders. Uh, Very different from BlockFi or Celsius, where you're going out on the risk curve and lending to riskier and riskier counterparties, and then it all blows up in order to get your yield, right? Like that was what their business model was. In this case, you're borrowing in the case of debt, or you're issuing new equity at a premium and effectively buying Bitcoin at a discount to add that to your balance sheet for the benefit of shareholders. Um, Super different fundamentals, and I think it all comes back to that accounting reality of like the value of a business is its balance sheet. Yes, the income statement matters, and can be used to project earnings in the future. Apple, we were just talking about 35 PE ratio. Right? 35 price to earnings is what it trades at, which means you're buying a low growth company, and you won't be made whole for 35 years of earnings at the valuation you're buying in at. And that's, that goes against value investing, that level of PE ratio. That doesn't make sense. But everything has been bid up in equities markets to crazy PE ratios. And then here come these Bitcoin treasury companies that are, yes, they're moving fast, and yes, they trade at a significant premium to their net asset value of their
Well,
Bitcoin
some
and
of them,
cash.
some of them, are less than, but they're all above one, I believe, at this
Yeah,
point.
they're all above one, right? There are some that are not trading at a huge premium. There are others, like I'm involved with Smarter Web, and that trades somewhere between 5 and 15 MNAV premium to the net asset value of cash plus Bitcoin. And that, to many people feels like it's overvalued, right? Because like you're paying that much more for Bitcoin exposure, but that company is adding Bitcoin per share at a very rapid rate. And if you look historically, it's taken 35 days to add that much more Bitcoin per share. So if that same rate going forward was to apply, and there's no guarantee of that, then it would take 35 days to get back to that like 1-to-1 Bitcoin valuation, and then that strategy continues into the future. So um, yeah, I think what's super different about Bitcoin treasury companies is that they are not trying to, as with ICOs and altcoins, they're not trying to create a new currency that will have lasting value. And with like BlockFi or Celsius yield generating value propositions, they're not hiding a ton of risk that's eventually going to blow up. With Bitcoin treasury companies, they're utilizing capital market tools to strengthen a business's balance sheet by accumulating the most attractive asset in the world, which is Bitcoin.
And the leverage component, how do you think about the difference? Michael Saylor calls it intelligent leverage, that really differentiates it from um, more reckless leverage, right? Because a lot of people are commenting that, like, oh, this is a bubble, it's over leveraged, and I look at it, I'm like, I'm trying to find the leverage here. Chanos's critique is that there's insufficient leverage, that Sailor's not selling enough preferreds. So I'm just
Oh,
left
I haven't
scratching
heard
my
that.
head of like, wait, what's going on? That people are seeing these two things at the same time.
Yeah, wow. I hadn't heard that last little bit. That's funny. I'm sure Saylor is going to try his best to
Yeah.
satisfy that critique. Strategy's done a good job of this, of keeping their leverage ratio low. MetaPlanet has done a very deliberate job of it as well. I think their peak leverage ratio was something 20, maybe 30%. Um, and they've now like eliminated all of that debt. Uh, they're keeping a very clean balance sheet, and you can do that with a Bitcoin treasury company because the bread and butter of the strategy is equity issuance, and there's no debt there. And so if you're, MetaPlanet's, most of their fuel for their growth over the last 15 months has been moving strike warrants, which are their form of equity issuance. And when you're trading at a premium, you get to raise money at a premium and then use those proceeds to buy Bitcoin, and it increases the net asset value of the company at a greater rate than the dilution of shareholders, because of those dynamics.
Yeah, I've heard somebody like describe the premium as the market is asking you to buy Bitcoin. They're
Yes.
asking you to issue shares and buy Bitcoin.
Yeah, and in that sense, that the higher the MNAV, the more they want that to happen, and the more they expect that to happen, because the higher your MNAV, the greater the expectation of rapid accretive dilution of new share issuance and other ways to add Bitcoin per share on behalf of shareholders. And yeah, it all comes back to the very sound mechanics of corporate finance, and specifically balance sheet focus of what these businesses are doing. I mean, we talk colloquially about businesses as instruments for generating profits, and we tend to only think about like how profitable they can be in the future. But with this transition from fiat capital structure to Bitcoin based capital structures that's going on now, there's such an opportunity to get performance for your company not through improving your income statement, but by improving your balance sheet and using whatever tools are available to arbitrage the realities of fiat into the benefits of Bitcoin.
Although now with fair value accounting, you do get the income statement impact of the
Right.
unrealized gains and losses, which will be volatile. But if we're bullish on Bitcoin, the net of it will be lots of unrealized gains.
Yes. Yeah, and has strategy implemented that, or they keep kind of pushing that out, the FASB switch?
I think this was when they publish their quarterly, that it will be the first one, if
Yeah.
I recall correctly. But fact check me on that. Hopefully, the SEC doesn't sue me for misinformation.
Well,
Not this SEC. um, yeah, the leverage part makes sense. I've also heard people like express concerns about the dividends or the interest from f- to f- pay the financing,
yeah.
coming out of financing, right? Of we're going to issue more common stock to pay interest or to pay a dividend, and that uh they see that as being Ponzi-ish somehow. That's they don't like that flow on the cash flow statement.
Yeah, it sounds weird, right? It feels like you're not building on a solid foundation. Um, but so in Strategy's case, they now have four instruments. I guess the Stride one is not yet ATM, but they will have four instruments that they can sell at the market whenever on the day, whenever conditions are appropriate for them to sell that particular instrument in the market. And then the proceeds from those funds, very clearly in their facilities, prospectus, it says the proceeds can be used for working capital. So that means anything. That means you can pay your dividend expense using those proceeds, and it can be for the same instrument, to pay holders, or it can be for the other instruments that you have. The important part is that the proportions there are not unreasonable, right? Like you can't you can't pay dividend expense that's like 100% of the value of the company, of course. But if you're in Strategy's case, their dividend obligations, really interest expense packaged up as preferred equities, is a tiny percentage of their value, a tiny percentage of the proceeds they're generating from issuing new stock, uh, of their MSTR stock, and also their preferred equities. So it's nowhere near being a concern, especially when you think about their balance sheet has $60 billion of Bitcoin on it.
Yeah, and there's this bias that they should sell the Bitcoin, right? That in order to make payments in the future, they have to realize those gains and get cash out of their investing activities. But ultimately, that's just a bias that people have. I think from just the historical fiat financial system, right? Where that's what people do. Although, I would point to there's plenty of companies where they just go from refinancing to refinancing and rolling their debt, and nobody accuses them of being a Ponzi.
Yeah, exactly. I mean, and Saylor makes such a good point of this, of like, if you're returning capital, you're saying we have no better idea of what to do with this than give it back to you. And Saylor's strategy is to leverage Bitcoin, to ride Bitcoin for the benefit of shareholders. And his hypothesis is that Bitcoin will continue to grow at a 29% CAGR for the next 20 years. I guess actually he's upped it recently from from his numbers before, but it was 29%. And he's more than happy to pay 10% to borrow capital to put it in Bitcoin and let it grow at 29% and keep paying a 10% dividend uh, in order to do that. And that's what people are missing here, is that there's these two giant pools of capital in the world: equities and bonds. Bonds is over 300 trillion and equities is 130 trillion and change. As we talked about with Apple, equities are all overvalued just across the board. And bond capital is getting low, mid single digits annual returns, when I think the true inflation rate is something like 7%. That's what Saylor has in his model for how things will go over the next 20 years. And I think that's right, because that's what M2 has been growing at and continues to grow at, roughly. So I think that's the true inflation rate for all assets. So if you're holding a bond, if you're holding a T-bill getting 4.5%, you're destroying value at 2.5% a year, just by holding that. And what you could do is instead reallocate some of your capital to these instruments that Strategy is now offering, where they're heavily over collateralized. They, in my opinion, have a better credit rating than the U.S. government at this point, and they're saying we'll give you 10%. You don't have to hold T-bills getting 4.5%, destroying value. You can actually get a positive return if you understand this instrument enough to say yes to that proposition. And I think what we're seeing is a trickle that will grow into a stream and eventually a tidal wave of capital flowing from the bond market into Bitcoin through Bitcoin Treasury companies that offer these products.
Yeah, and I think that when people look at this, and the common question obviously is, okay, well, why don't these bond buyers, why don't they go buy spot Bitcoin instead? And it's just completely misses the fact that their mandate is to have a stability of value. It's not to go long high volatility asset like Bitcoin. So they need what Saylor referred to as a step down transformer, right? That takes the wild swings of Bitcoin and kind of clips it. Is that your read of why there is so much natural demand for products like this?
Yes, completely. Put yourself in the shoes of like a fixed income portfolio manager. Maybe you're managing a billion, maybe you're managing $100 billion on behalf of some pension, and your mandate is to find fixed income products that offer a specified yield and manage that risk as a portfolio. And then you're delivering that as your value add to a pension of like, this is taken care of. You got these properties in this pool of capital, and they all add up to this amount of return. And they're not able to go park some spot Bitcoin on in that portfolio, because it has to be fixed income instruments. And so Saylor, I had never heard that step down transformer, but of course a classic engineering masterclass. That's perfect from Saylor. That I'd say it as he has figured out what products he needs to offer to meet bond capital where it is at. And that's what he's done with these preferred equities. Of they can say yes to a 10% dividend. They can't say yes to just holding Bitcoin in their portfolio, but a 10% dividend, and I think risk adjusted, a better offer than anything else that's out there. Because you could probably get a higher rate of return with some really stinky junk bonds, but risk adjusted, that 10% from Strategy is extremely appealing, because it's actually very low risk.
From the perspective of kind of the wider Bitcoin Treasury company ecosystem, how do you view the different participants as differentiating themselves and being able to, in some sense, compete with Strategies, network effects, and economies of scale? What do you think are the different factors that make for those breakout successes? That are adjacent to strategy.
Yeah. I did some analysis, I guess about a month ago now, of the current state of like Bitcoin treasury companies. And I make the distinction between corporations who have adopted Bitcoin as part of their treasury strategy and
Right.
corporations who are actively pursuing a pure Bitcoin yield strategy with their treasury. And of the Bitcoin treasury companies, strategy has like 90% plus of all the Bitcoin of all the companies doing that. They have a massive lead, and they will. They've already cemented it. They've won in the U.S. and they've won globally. They will be the. I think part of this analysis. I think that Bitcoin treasury companies will end up holding half of all the Bitcoin 20 years from now. And that's a crazy number. It doesn't feel possible, but when you think through the mechanics, that's what I think is possible on the high end. And I think that strategy will have half of that, so a quarter of all the Bitcoin, 5 million Bitcoin, I think, will be under strategy's umbrella. And there's no really competing with that, but at the same time, you don't have to be a direct competitor with that. You can win alongside strategy. Um, what I'm very bullish on is that I agree with the UTXO thesis that there will be a dominant Bitcoin treasury company in each capital market. And I think that's what we've seen with MetaPlanet over the last year is, they started as a $10 million failing hotel company, and they have used the capital markets tools available to them to become a $5 to $10 billion company in 15 months. And they have put themselves in clear leadership position in that capital market. It feels like they are very close to launching their own preferred equities, and further cementing that lead. They will be the destination for Japanese capital to get Bitcoin yield. And that value proposition is now and will continue to be very attractive. And they'll continue to grow their Bitcoin holdings as a result. Um, and I think that will also happen in every other capital market. And so I'm involved in. I'm on the team at Smarter Web in the UK, and I'm very excited about what's going on there because it feels like we have a line of sight to run the same playbook as MetaPlanet has over the last 15 months, and it's already well underway. And we've already established a leadership position in the UK as a Bitcoin treasury company, something like 10x larger than the next closest competitor. And I think that's a formula for success over the next year and beyond. To beyond where MetaPlanet currently is. I think there's a line of sight to get to that, and then I think you continue to grow from there as well by continuing to follow the path that strategy has already blazed. So it's kind of amazing. At this point in time, we're watching the development of a very new industry that I think will be the big story in finance for the next 20 years. I think that Bitcoin has been the story for the last 16 years in the thing that nobody saw coming, that has been the big winner in global finance for the last 16 years. I think that Bitcoin treasury companies will be that story for the next 20 years, specifically because they're designed to meet capital where they are at and offer these products like these preferred equity products that strategy has pioneered, in order to ingest capital, buy Bitcoin, deliver Bitcoin yield to shareholders, and then keep doing it.
Do you think perpetual preferreds are somehow inherently the most adapted form of financing for the asset because of even on Stride, where he can turn off the interest payments, and so it's almost like you've got permanent capital on the asset side, and therefore you should have permanent capital on the liability side.
Yeah, 100% agree with all that. Very sharp, Pierre. Um, yeah, I hadn't actually thought about exactly how you phrase that. It's perfect. I do think that these perpetual preferreds are the end game for any Bitcoin treasury company. I do think you need to get to a certain scale, have a certain balance sheet in order to offer them, because you know what's inherent in that proposition to bond market capital is, look at how great our balance sheet is. There's we are not a low credit rating entity. We have an incredible balance sheet position, and you're gonna get your money if you enter this you know deal. And then of course you need to grow that market, right? And Strategy has done a great job of that. They introduced these preferreds at a discount, and for the first couple of months they traded below the par of $100. They were introduced at like $80, and now they're all trading at a premium. Well, Stride's still new, but um, yeah. So the market has learned that this is actually a really attractive value proposition, and increasingly Strategy's capital raising will be through these instruments. And I think what Saylor likes to show, that chart that I made of the global asset landscape. It was $900 trillion. It's now $1,000 trillion with my 2025 update. And the reason he likes, I think, the reason he likes to show that chart is because the bond market sticks out there as this giant pool of capital, and he knows that they're not getting good returns, and he knows that that capital has these fixed income mandates, and he knows that that's the fuel source for his company to tap into that capital, to offer them, here's your 10%, and then he can use that money to buy Bitcoin and benefit shareholders and massively increase his company's holdings. So I think that's the roadmap for every Bitcoin treasury company is, you have to start with equity, because you can't start with bond, you can't start with preferreds. You don't have a balance sheet that's good enough yet. So you have to build that balance sheet through equity issuance, do the accretive dilution model that MetaPlanet has proven is possible, starting from nothing. Do that, execute well enough on that, establish a leadership position, and then you're in a place where you could explore preferreds.
And so, could you think of Bitcoin treasury companies as essentially a way of coordinating between individuals to access better leverage than they would have individually?
100%. I mean, I would love to borrow. I would love to borrow $100 million through a convertible note at 0% interest and buy Bitcoin with it,
Yeah.
but I can't do that. I can't get debt cheap enough to make it worth doing that in size. Right? It's just not possible for an individual.
Maybe one day.
Maybe
Maybe
one day.
after the regulations on the banking system have loosened up.
I would love that. But, we can't do that. But a corporation with a balance sheet and a track record can. And that's what's happening here, is like these capital market tools are available to public corporations,
Yep.
and they're not available to individuals. Like, I can't issue stock in Jesse
Right.
and then turn around and buy Bitcoin with the proceeds of that. It's not possible, but a corporation can do that. They can also access 0% interest rate debt, and then they can create these preferreds. So these are all that full set of tools is only possible for a corporation to do, and not possible for an individual. This is how you get access to Bitcoin yield, because these tools make that possible. And that's also why investors are willing to pay a premium to get in on that, because they expect that if I pay more than the net asset value of the Bitcoin today, and they keep executing on this strategy, then I've eventually grown my Bitcoin, even though I bought it at a premium.
And how do you see the evolution of MNAVs? Is it that when the company's young, it has a higher MNAV, and then as it gets older, the MNAV compresses? Is the 2x MNAV kind of the long term equilibrium, or do you think there's more to it than that?
I think people have like a rough sense for it. I think Strategy, MetaPlanet, and like Smarter Web are kind of I think the three best examples of Bitcoin treasury companies in the three different kind of formative stages for a Bitcoin treasury company. Strategy, obviously mature. Their MNAV is usually under 2, right? I guess it's kind of 1.5 to 2.5, something like that. We've watched MetaPlanet go from kind of a 5 to 15 MNAV down to where they are now, 3 to 8, something like that, as they've grown. And that's just the math of, like, for Strategy to double their Bitcoin per share, they'd have to, something more than double their Bitcoin holdings. It's pretty hard to double your Bitcoin holdings if you're holding 600,000 Bitcoin. So that's a tall order, but it's pretty easy for, Smarter Web right now holds 773 Bitcoin. It's pretty easy to double your Bitcoin holdings from that base, right? And so that's the reality of the math. It probably won't take Smarter Web that long to double their Bitcoin per share, but it will take Strategy years, quite a few years, I would expect. Well, maybe it's 2, maybe it's 1.5. And MetaPlanet somewhere in the middle. And I think, we've seen MetaPlanet. There's a great chart that Dylan put out of MetaPlanet's MNAV over time, and you can see the volatility, and it kind of trends down as that company has grown. I think that's the reality of any Bitcoin treasury company. What you can do as a Bitcoin treasury company, though, is continue to execute, at better than average for your life cycle stage. I think MetaPlanet has been doing that. They've been managing to maintain a lower days to cover, meaning how long it takes to get back, your MNAV, to earn that amount of Bitcoin. They've been doing a really good job of fighting gravity, for, and resisting that rate of diminishing returns there. But it is also, inevitable, and I think the end state is probably something in the 1.2 to 1.5 range. In the same way that for stocks we pay a PE ratio for future earnings, discounted to today. For Bitcoin treasury companies, you're going to do the same thing for future Bitcoin earned, discounted to today, and that'll be, you'll be discounting the full future revenue, future stream of Bitcoin per share each year into the forecast horizon that you choose. You discount it to the present, and that's what you're willing to pay. I think it'll be quite doable for a company like Strategy to earn 5% a year, something like that, in a pretty end state scenario. And you'd be willing to pay 20 to 50% premium for that every year into the future. So I think that's kind of where these end. But the big caveat is, I think it's going to be winner take most in each capital market. Strategy is going to be the winner in the US. MetaPlanet looks like it's going to be the winner in Japan. There will be a lot of also rans that are not able to, deliver the kind of reliable, consistent Bitcoin yield that the dominant player does. And there will also be some heartbreak, I think, as some of these companies get out over their skis, taking on too much risk, trying to make up ground, and that'll be where people get burned. Because if you take on a leverage ratio of 50% and then suddenly there's a 60% drawdown, that's bad.
Yeah, so on that, where do you think on the Bitcoin side we are in terms of the Bitcoin cycle? Do the halvings still matter? And how does that translate into kind of the cycle around treasury companies?
Yeah, obviously the most dangerous phrase is this time it's different. So I refuse to say that, but it's possible that the Bitcoin treasury companies add like a very meaningful new layer of demand that softens any bear market. And I don't know what the answer is. I will continue to expect out of conservatism, I suppose, that the trend that we've seen over 16 years will continue of, slightly less severe bear market each incremental bear market. Starting with like 90% drawdowns, and we've worked our way down to, I forget, 73% or something like that in the most recent one. So, I wouldn't be surprised if we have a 70% bear market. I'd be surprised if we have an 80% plus bear market. Um, but because of this, the new scale of demand from Bitcoin treasury companies, as they really get up to speed too with tapping the bond market, as Strategy gets grows that
Yeah.
pool, um, then it could mean a 50% drawdown is our bear market, and people are expecting more, and it never comes because Strategy's there buying the hell out of that bottom.
And short term, as far as I know, there's a number of new Bitcoin treasury companies that have not closed and bought Bitcoin yet, and that are sizable. But do you kind of see a distinction in the market between, uh, let's say, the big SPAC Bitcoin treasury companies versus the ones that are foreign, fresh capital market, that they're not having to compete against others? Or do you think that there is room for competition within the U.S.?
Yeah, there's definitely room for competition, and I waffle on this myself because I think that there will be losers, but it's also a great idea to just be adding Bitcoin to your balance sheet. Like you may be a loser at a really really good idea,
Well,
and
or on a relative basis, right? You underperform peers, and
yeah,
but you outperform
every
everything else
fiat
out
company.
there.
Yeah, right. I think that's right. That's a good way to frame it. There are a lot of companies that are popping up with like somewhat sketchy origins, that or structures that are opaque and self-dealing a bit, and they won't end up great. I think that just kind of looking at what's happening all over the world, because there's going to be a lot of people who view this as a way to make a quick buck because of look how well MetaPlanet and Smarter Web are doing, and they're going to come in and try to make money for themselves, but rather than for their shareholders. I also think that there is a mistake that some of these companies are making of trying to just buy as much Bitcoin as possible up front. I think that's the wrong approach, because I think you actually want to start small and grow, and deliver a track record of growing and adding Bitcoin per share over time, because not only do you prove your mechanics, you prove your performance, you um, grow your investor base, you grow your liquidity, and liquidity is essential, because if you're selling at the market, you need a certain amount of volume in order to do that without moving the market. So all those things, and especially like building a community that is rabid and will talk you up to their whole network, is a part of success here. Um, and I think it's the wrong move to come in and buy 40,000 Bitcoin or 50,000 Bitcoin, or even come in and say boom 10,000 Bitcoin, because it's really hard to follow that up with
Mm.
you know if you come in and you buy 50,000 Bitcoin, you need to buy 100,000 Bitcoin more within a year in order to even have any good metrics to show, and that's pretty hard.
But
So I yeah.
if those bigger companies, if the reason they're bigger is because they're tapping into more institutional capital and less retail capital, I agree with your point that you want to give retail an opportunity to have grown with you and to have, like, been a part of the upside that drives their excitement, and you don't get that with a big raise up front. But you, do you see a path where a lot of the new entrants, they start institutional and they just continue institutional and are able to raise that amount of capital?
Maybe that I'm missing something here, and I have been focused on the kind of organic grassroots retail driven version of the Bitcoin treasury strategy, because I think I'm so impressed with MetaPlanet and what they've done, and I think that's a repeatable model in in each capital market. I think there can be a MetaPlanet in every meaningful capital market. I don't know about the like institutional variety of this. I do think it's, like, okay, so if you come in and you buy 50,000 Bitcoin and then you don't do anything for a while, what happens to your MNAV? Right? Like, what do you trade at?
Yeah,
Um, there's no excitement. There's no track record of, continuing to add Bitcoin per share. So I think your MNAV ends up low. Then if you issue more shares, you don't get as much accretive dilution for it, and you kind of you've shot yourself in the foot. Then you've kind of you've set a ceiling for what you can achieve in terms of accretive dilution and scale.
that makes sense. So that's a really interesting perspective. I think that there's going to be so many trade-offs between these different approaches. Um, and what do you think about how the Bitcoin are actually used on the balance sheet, right? I think that Saylor's perspective is keep it in cold storage. Don't go try to earn yield on the Bitcoin on the corporate balance sheet. Do you think that there's or even the use of derivatives, right? Where MetaPlanet, part of its income growth has been from writing cash secured puts. Other companies shy away from that and view it as, keeping too much cash around, which I sympathize with. But what do you think about kind of the active management side of the treasury company play?
Yeah, what MetaPlanet did was really interesting, very effective for them. I was talking to Dylan about it, and he said that it was important in Japanese culture to show profits and to have that as part of the perception of the company and the success of the strategy to show that this is a healthy business now, even though we're doing something different, it's working and it's delivering profits. So culturally that mattered, and I think that was a great way to achieve that. I think that the purest strategy is probably the risk adjusted better one to do, if you don't need to prove to your culture that that you exist in, that this is a healthy business by showing profits. I do think that all of this will eventually, 20 years from now, assume we're in a world where all the capital that might be interested in Bitcoin from the bond market has moved into Bitcoin. All the capital from other asset buckets that might be interested in Bitcoin has moved into Bitcoin. And a lot of it moves into Bitcoin through Bitcoin treasury companies. In that sort of end state, maybe it's 20 years, maybe it's 30 years from now, I think that, strategy becomes the best lender in the world. Um, and they probably partner with a variety of banks, of top notch banks. I mean, I think that Saylor is open to the credit risk of lending to Goldman Sachs, since they're going to be backed by the U.S. government anyway.
Right. And at some point, we expect that Bitcoin's growth rate is going to slow
Yes.
down and be less than potential investments that they could make with those Bitcoin, right?
Right.
That's at least, that's the thesis I laid out 10 years ago or so, but it's going to take a while.
There's value investing, as it's commonly thought of, doesn't make sense right now, and well, during the transition to Bitcoin, it won't make sense. But after that transition, when you reach a new equilibrium, and the thing to do with capital is put it to work in value investing ways, and that can include lending too. That's all super long term, and I think that in the near term, what we've seen in Bitcoin is that you know trying to generate yield by lending out your Bitcoin doesn't work, and that's, I think, because the market is not yet mature enough, and you're competing with, like, how do you keep up with the CAGR of Bitcoin? Like, people have to put that Bitcoin to work, generate a return, and then pay it back, right? But you're not able to outcompete Bitcoin's just appreciation from just holding. So everybody ends up underwater on that, and you can't make do on your debt obligations, and then eventually the lender collapses. That's what we saw with BlockFi and Celsius. That's what we've seen in general with Bitcoin lending. And so I think it's for quite a while here still, it will be risk adjusted a terrible idea to lend out your Bitcoin. And you're making that decision on behalf of shareholders too. You're much better off not trying to seek out that extra few percent during this transition where Bitcoin's going to deliver 29% CAGR. Just hold that and don't chase a few extra percent. And when inevitably the borrower will not be able to do better than 29% a year by putting that Bitcoin to work, and they will end up not being able to pay it back. So I think those two things are true at the same time. I think this all heads in a direction of strategy is going to be able to get like 5% yield through, and that'll be through whatever makes the most sense. Like maybe that's lightning channels and earning a yield through that. Maybe that's lending to Goldman Sachs. It's probably a diversified portfolio of Bitcoin yield generating operations, because that's what these Bitcoin treasury companies ultimately are. They are in the business of Bitcoin yield.
That makes sense. And I think that's a great place to close it out, because that's a really fascinating vision for the future, Jesse. Thanks for coming on. Is there where should people find you?
Yeah, I'm active on Twitter at Croesus_BTC. And you can find me also in the Smarter Web Company Twitter group, which has been growing very rapidly and very exciting, because I think we're in the early stages of repeating the path that MetaPlanet has laid out in Japan, but now doing it in the UK. Super excited about that. If people want to engage with me about that or anything else, Twitter's probably the best place.
Awesome. Perfect. Well, thanks, Jesse. And we look forward to having you back on the show soon.
Me as well.